Good morning. Happy Monday. My name's Simon. Welcome to Simon's Trading Channel, where I do a daily Bitcoin price action analysis. There was a weekly closure just yesterday on Bybit and many other exchanges, and it's still in a very boring range. So I thought today what I do is very quickly talk about volatility and how important it is for a trader. So volatility, as I'm sure you're aware, is a word to describe the degree of price movement. And so high volatility charts, assets, commodities, stocks are great for trading. Low volatility are not so good for trading. Conversely, if you're an investor, you really want to have something that you can invest which really has low volatility, because you want a predictability to your investment, particularly if you're investing on someone else's behalf. Anyway, that's not for today. So there are numerous volatility matrices available on TradingView. Two popular ones are the Bollinger Bands and the BBWP. Now, the Bollinger Bands were made by a very clever chap in the 1980s called John Bollinger, and they are basically a norm curve, which you can apply statistically to any data set. They're a norm curve based around a 20 SMA moving average, and you end up with three lines on the chart, the middle being the 20 SMA, and then a top line and a bottom line, which are the Bollinger Bands, and they reflect one standard deviation. You can change it to 2 or 3 or whatever you want, but basically they're a measure of volatility within the market. So as you can see here, when the Bollinger Bands are close together, or closer together, there's low volatility, so the price isn't changing very much. When the price starts to trend in one direction, you get increased volatility, and that is reflected by widening Bollinger Bands. And so periods of low volatility or narrow Bollinger Bands tend to precede periods of higher volatility, which is clearly what you want to be involved with if you're a trader. Now, the sort of second generation, if you like, of the Bollinger Band was the BBWP, which I should have somewhere lurking on my chart, but I don't, so I'll throw it on right now. These are easily found on TradingView, just like I have done right now. So I'm not entirely sure who developed the BBWP, but it's labeled Caretaker, who I'm aware of has created a lot of amazing indicators. I don't know who he, she, or they are. Maybe one day I'll find out. This is if you like, a percentage derivative of the Bollinger Band. So as you can see, comparing the two, when the BBWP, and this is two lines, the colored line is the actual measurement, and the white line is a moving average. So in a way, you just look at them as one line. So as they get down to the low readings over here, which is a percentage, that reflects low volatility or a narrow Bollinger Band. And as the Bollinger Band expands, you get raising in the BBWP right up to the top, which will be close to 100%. And that reflects the high volatility or the consistent movement of price in one direction. And as you can see, it oscillates around between 0 and 100. The reason I brought it up today is that, as you can see, the BBWP, so the volatility matrix, is really low. Hasn't been this low for a while. It was significantly low for a long period back last summer, and it really stayed down low until sort of October, which preceded this then breakout move here on the weekly. So the weekly volatility is very low. You can see that from a measurement on the Bollinger, on the BBWP. You can see the Bollinger Bands narrowing in, but the price action tells you, of course, by just going sideways. So these are interesting tools to have in your toolbox, but ultimately they're all derived from the price action, and you can kind of see with your eyes, excuse me, the sideways sideways movement, which effect is a low volatility. So I'm going to take them off for now, and we'll just have a quick look at the lower time frames. Let's get a nice clear screen, and we'll zoom down to the 4-hour. So not a lot has changed, although there may be a move occurring on these lower time frames. And you can see there's having had this most recent wick down with what now looks like a small bounce up, you could argue that this is a sequence of higher lows here. So on the 4-hour, this does look like, if I draw a line of randomness on, see if I can pick that up, being a bit cack-handed with my mouse. This does look like a sequence of lower highs, and this looks like a sequence of lower highs, maybe with a bit of a break occurring, but we need to see that. I would need to see the closure of that first. I think what's probably more useful is a range high, and you can do that just as a horizontal line. So remember, I talk about my logical lines. So they're just in a logical area. Seems to be quite a logical area to me. What that suggests to me is that, you know, there's buying and selling pressure on the lower time frames. It would appear that the buying pressure is winning that battle just about over the last, so since the 26th of January, you know, where are we today? What's the date today? 5th of Feb. So yeah, a good couple of weeks there. There's been an ongoing battle, and it looks like the buyers are probably just about winning, with the significant overhead resistance, which is also visible on a weekly. So, you know, this has got some resistance power to it, coming in around about 43.5. And the reason why that's useful is that 4-hourly closures above 43.5 would look good for more upside. Probably initially to about $1,000, maybe 44.5, and then who knows after that, might even get up to sort of 46. But that would probably then start to bleed through as increased volatility through the higher time frames. And it's, you know, unlikely to happen all in one candle. Although you never know with Bitcoin, sometimes it does. So it feels like there's a battle at the moment where the buyers are just about winning, and the counter argument, of course, would be a 4-hour closure back below 42. Yeah, more or less 42, somewhere around there, somewhere between say 42 and 42.5. Yeah, that would look good for maybe another move back down to close to 41,000 initially, but there may be a retest of these lows. So I think it's in the balance at the moment, and we'll see what happens on the very low time frames. You can see the same sort of thing effectively. Sequence of higher lows, sequence of lower highs. It's wedging itself in for sure. And that just reflects the declining volatility, but inevitably that leads to expanding volatility. And that's when you really want to be in on the action. You want to be on the right side of the trade or the right side of the price action. So I'm going to leave it at that for now because that's 10 minutes. I hope you all have a marvelous Monday, and I'll catch you tomorrow.